Opendoor stock has been on an impressive run this week, and as we head into Wednesday's pre-market, all signs point to a market still paying very close attention. After closing Tuesday with another gain, building on Monday's explosive 18% rally, the stock added even more ground in after-hours trading. That's important. It tells us that interest in this name isn't just a daytime phenomenon. There's conviction from traders and investors who are willing to keep buying even when the regular session has ended. And now, with chatter building across social media platforms like Reddit, StockTwits, and X, we may be setting up for a potentially volatile and exciting Wednesday session. The market loves a story, and right now Opendoor has one that's easy to tell. Just 24 hours ago we were talking about Anthony Pompliano revealing his investment in the stock, joining Eric Jackson, who's been vocal with a sky-high long-term price target of $82. These aren't anonymous posters on a forum. They're well-known, media-savvy investors with distinct audiences. Together, they're creating overlapping waves of attention from retail traders, from tech-focused investors, and from those looking for the next short squeeze candidate. This cross-pollination of audiences can keep the spotlight on Opendoor longer than a typical meme stock spike, which historically fizzles once the initial hype dies down. The short squeeze angle is a major part of this story. Opendoor's short interest is still estimated to be in that 20 to 25% range of the float, a level that means any sustained buying pressure can quickly start forcing shorts to cover. We saw shades of that on Monday and Tuesday. Buyers push the price higher, shorts feel the pain, they cover to limit losses, and their covering becomes more buying pressure that drives the stock even higher. It's a feedback loop, and in the right conditions, it can take a stock much further than anyone expects. After-hours gains and pre-market buying can be especially dangerous for shorts because they can find themselves trapped before the opening bell even rings. What's different this time is that Opendoor's rally isn't happening in a vacuum. It's happening against a backdrop where the macroeconomic narrative is starting to shift in the company's favor. The Federal Reserve September meeting is now widely expected to bring a rate cut, maybe even the first in a series. For a company like Opendoor, which lives and breathes on transaction volume in the housing market, that's potentially huge. Lower borrowing costs can pull buyers off the sidelines, accelerate home sales, and improve affordability just enough to unlock transactions that haven't been happening in a higher rate environment. This isn't just theory, it's how the housing market works. Buyers respond to monthly payment affordability, and even a modest rate cut can make the difference between let's wait and let's make an offer. For Opendoor, more buyers means faster turnover of inventory, less time holding homes on the balance sheet, and better spreads between their buy and sell prices. In other words, a macro tailwind from rate cuts has a direct operational benefit. So when we look at Wednesday's trade, we have a stock with a strong short-term narrative, after-hours momentum, social buzz, high-profile backers, and elevated short interest, paired with a longer-term macro thesis that actually supports the business. That's a rare combination in the meme stock space. Too often, the short-term hype names are companies with deteriorating fundamentals or no clear path to improvement. Opendoor, while it has its challenges, at least has a credible story about how its operating environment could improve in the near future. Now let's talk technicals, because traders are going to be watching key levels closely. Tuesday's intraday high around $2.66 is now the immediate resistance. If we see strong buying in the pre-market and that level gets tested and broken early, it could trigger momentum algorithms and breakout traders to pile in, pushing the stock toward that $3 psychological level. On the downside, the $2.30 to $2.35 zone acted as support on Tuesday's dip. If that holds again on any early weakness, it's a sign the bulls remain in control. Pre-market volume will be worth watching. If we see heavy trading before the open with the stock already leaning toward resistance, shorts could find themselves on the back foot right out of the gate. That's when squeezes can become self-fulfilling, not because every short decides to cover at once, but because enough do to start the snowball rolling. And with social media chatter increasing, you can bet there will be plenty of eyes on the intraday chart looking for those very signals. For short-term traders, the setup is clear. The combination of elevated short interest, building volume, and influential voices drawing attention means the potential for another sharp upside move is very real. The goal in a setup like this is to be early, to spot the signs that the crowd is coming and position accordingly before the rush. For longer-term investors, the picture is less about catching the next one-day pop and more about positioning ahead of a possible shift in the housing market's momentum. Opendoor has spent much of the past 2 years navigating a very challenging environment: high rates, affordability pressures, and a cooling real estate market. If we truly are heading into a period of lower rates and modestly improved demand, The operational benefits could start showing up in transaction volumes, margins, and perhaps even in profitability metrics. The company's model works best when homes move quickly, and that's exactly what a rate cut-driven uptick in activity could deliver. That's not to say risks don't exist. The housing market is still facing structural challenges, and rate cuts alone won't create a boom. There's also the company's own execution risk. It needs to balance inventory turnover with maintaining healthy spreads and managing costs. But for those bullish on both the macro shift and Opendoor's ability to adapt, the current period could be an attractive entry point. The recent rally might be fueled in part by hype, but sometimes hype is just the spark that gets investors to look more closely at a story that's actually improving under the surface. As we head into Wednesday, my focus will be on three things: pre-market price action and volume, the test of Tuesday's highs around 266, and any signs that support is strengthening in that 230 to 235 range. If we get an early breakout with volume, the path to $3 is open. If social chatter keeps building through the day, we could see momentum traders and algorithms keep the pressure on shorts into the close. In summary, Wednesday's session has the potential to be another strong day for Opendoor. The stock has short-term catalysts in place: after-hours strength, social buzz, big-name backers, and a ripe short interest, as well as a longer-term tailwind from the prospect of lower rates and improving housing market conditions. The technical picture shows clear levels to watch, and the sentiment around the name is as high as it's been in months. Whether you're looking at it from a day trading perspective or with a swing trade or investment horizon, the setup is compelling. Opendoor isn't just moving because of a passing meme. It's moving because right now, the market is seeing a convergence of narrative, sentiment, and potential macro improvement. That combination doesn't come along often, and when it does, it can lead to outsized moves both in the short term and, if the macro story plays out, over the longer term as well. As always, the market will decide, but heading into Wednesday's open, the bulls clearly have the momentum.